Genesis, an institutional digital asset services platform that offers everything from crypto lending, trading, and brokerage services, they're releasing their first quarter market observations. Among the highlights include originating $20 billion worth of new loans compared to about $8 billion in the last quarter, as well as facilitating $31.5 billion in spot trading volume. Note to viewers, Genesis is the sister company of CoinDesk. And joining us now is Michael Moro, CEO of Genesis. Welcome this morning, Michael.
Good morning. Thanks for having me.
Great having you on. All right, so before we get into Genesis, I'd like to get your initial insights on Bitcoin and where you think the crypto markets are headed in the near and long term.
Do you want a longer answer than just higher?
Do you have a price target?
Yeah, no, I don't have a price target, and I hope that that's actually not a real question because I'm terrible at this game. But you know, for a firm like Genesis, who's been doing this since 2013, and us kind of pushing the, you know, kind of the Bitcoin narrative was really the only thing that existed for so long until, you know, Ethereum kind of came around. And for us, you know, the wave of sort of institutional adoption, I think it's sort of been the, you know, sort of a concept that was kind of just talked about. We were kind of pushing the narrative, but now I think it's sort of undeniable. And to be, you know, at a point in time in the adoption cycle where, you know, some of the biggest banks in the world are now, you know, kind of coming up with plans every single day to you know, launch some product or service kind of related to cryptocurrency is extremely exciting. And the fact that JPMorgan is somehow now in the Bitcoin, like, you know, exposed or crypto exposed stock is just mind blowing to me to kind of talk about how far, you know, we've really come.
Well, you're seeing an explosion of activity on your platform as the price of Bitcoin rises. So what do you find most notable in terms of where this interest is coming from and where it's headed?
I think it's a couple different things. You know, as you mentioned, you know, we have several business lines, and we can, you know, touch on each of them a little bit. But, you know, for trading, we've really kind of been focused on kind of the hedge funds and family offices, market makers, you know, for a long time. And then, you know, we saw the corporate narrative, you know, the buying Bitcoin with Treasury assets really kind of take hold, and, you know, in 2020, and we saw the MicroStrategies and the Teslas and the Squares of the world. And as I think that was started to pick up, we started to field a lot of phone calls from corporations trying to do the same. And so from a trend perspective, and we kind of discussed this within our report, you know, we basically went from zero in kind of corporate buying all the way up to, you know, north of 25%, right, of our volume that we did in Q1 was with corporate customers. And so, you know, it's too early to say this is a trend, right, because it's relatively kind of new and we're just kind of collecting data. But that's really been sort of an interesting data point for us, Michael, on the stock trading side.
Who are these companies that are using your Treasury services? What kind of companies are they? And are they buying puts? How many of them are buying puts, let's say, to hedge their position? It seems rather speculative on their part now to put it in if they're not necessarily in this business.
What's funny is, you know, we focused a lot on obviously kind of the U.S. Sort of domestic companies. But we've really kind of seen interest from international clients as well. We've done the Treasury services for Latin American clients. We've done the same for Southeast Asia clients. And what's also been interesting for us is there are companies that are in the buy and hold camp, right? Guys that are sort of allocating 1, 5, 10% of their kind of corporate Treasury cash and cash equivalents to Bitcoin. As a hedge against inflation, especially, you know, sort of abroad where inflation rates can run much hotter in the 20 to 30% or even north of that in some countries. There's also been some companies that are now trying to like trade crypto.
What kind of companies, though?
I'm sorry?
What kind of companies are these? What
these
sort
are
of companies are
tech sector. Kind of similar to, you know, the Squares, the Teslas. They have a tech bent. They may not necessarily be sort of a payments company, but a lot of them have like a software background or an e-commerce background and have some sort of element of kind of technology.
Can you name names?
No, I wish I could. It'll make the reports a lot more interesting, I think, when I can talk about them. But ultimately, I'm sorry?
Yeah, they're not financial institutions, let's say, or they're not in the manufacturing business or some of the older type of businesses, but they're primarily people who are already tech or companies that are already tech focused, correct?
Yes, that's correct. Although there are some companies that have been around for decades, but they have, in the last, call it 5 to 10 years, obviously kind of had to adopt a lot of technology kind of into their products and services. And so, I would probably categorize them today as within kind of that tech vertical.
Are they doing though? Are they hedging? Like what exactly is their reason for doing it? Is it just they've bought into the Bitcoin narrative, or is it because of a specific thing involving their portfolio?
I think it's most so they are, to answer your question, using options and hedging and as well as kind of like, doing call overwriting or covered calls. You will see them play, other options like puts instruments to kind of limit risk at times. But like for most of them, the 1 to 5%, is really kind of like not worth hedging from a price perspective. And they're just kind of doing it as a diversification play. I think as kind of Bitcoin becomes an investable and frankly acceptable asset to have on your corporate treasury balance sheet.
Good morning. Can you break down a little bit the crypto lending model? Because I don't think people generally understand it. So, first of all, just most simply, how does it work? And what are the benefits of it over just kind of more traditional lending models? And why is it booming right now, aside from just the general booming market?
Sure. So lending was a business we started about 3 years ago. And up until that point in time, people sort of bought Bitcoin and just like kept it in their wallets, right? It was not a useful asset beyond that because it had no interest or dividends or anything like that. And it would, there was no services to kind of provide that. So what we did was we started to say, what if we were able to borrow that crypto? Bitcoin and Ether and Litecoin and some of the other ones at the time, and said, okay, we'll pay you interest on the loans that you make to Genesis. On the other hand, the 2017 bull market, while it was really like retail driven, I think really introduced more institutional investors and trading firms and hedge funds kind of into the space that started coming to us and said, hey, we'd love to get a working capital borrow in Bitcoin or any of the other kind of cryptos, and said, we have, we're a market making firm. We have to pre-fund exchanges. Can you give us a bunch of Bitcoin so we can, trade and arbitrage across a bunch of different venues, or for working capital reasons for trade settlements with OTC desks. And on the other hand, we saw a lot of demand for US dollars. That was later in 2018 when we had a lot of people that were long Bitcoin that had kind of bought a lot in the bear market. It's kind of the price was kind of coming down, and they said, I'd love to go levered long. Can I, without selling my Bitcoin and incurring, the taxes and whatnot, and give up the upside, frankly, is there a way for me to kind of monetize a portion of my Bitcoin holdings or my other crypto holdings and get US dollars on it? So that was really sort of a turning point already. It was only like 6 months into the business, but the rapid growth for that. And frankly, there's not really a lot you can do with your Bitcoin today. You can't kind of walk into a bank and get a loan against it. You could walk in with $100 million worth of Bitcoin. There's not a single bank that will even give you $1, right, against your $100 million position. So for us, I think it was an opportunity to kind of introduce capital into the system. And said, okay, there is a way Bitcoin is useful. And for the institutionalization of the asset class, you have to have a way for like a repo or reverse repo markets you have in kind of established markets and kind of bring that to the cryptocurrency space. And that's what we have today. with our $9 billion of loans outstanding that we had kind of at the end of March. And, $2 billion of that is US dollars. But like we always kind of get caught in the interest rate narrative, why is kind of US dollars rates in crypto, in the mid-teens. And that's really like a function of demand and supply. And you have this environment where the traditional lenders, kind of the biggest banks, are not lending, to crypto firms and into the crypto space. And so there's a premium for capital, especially in the form of loans today in the market as it exists. And maybe that'll change, maybe it won't. But that's kind of the market dynamics as it is today.
Thank you. I think that was probably the clearest explanation of crypto lending I've ever heard, so thank you. Just one quick follow-up. My understanding is that in the crypto lending world, DeFi lending is booming more than Bitcoin itself. Can you just explain what the reason is for that?
Sure. So for one, our loan mix changed significantly from Q4 to Q1, as we kind of detail in our report, where Bitcoin used to be more than half of our crypto loan portfolio, and it was down to like 42%, I think, at the end of Q1. And a part of that, I think, is the world waking up to the ability to lend your Bitcoin. So a supply-demand dynamic that said, hey, it's really kind of like supply constrained in dollars, as I was talking about, is actually more like demand constrained in Bitcoin today, as there's more availability for Bitcoin to kind of get or borrow. So the interest rates have fallen significantly. And number two, kind of where in a bull regime, in a bullish market like we have today, there's really no reason to like short Bitcoin or to kind of get or borrow in Bitcoin as much as when we're in a bear environment. At the same time, Emily, to your point around like DeFi, I think a lot of the DeFi protocols running off of Ethereum and kind of the explosion that we saw. You guys were talking about like the total value locked in DeFi markets. I think because there's a lot more things you can kind of do with Ethereum today, we've seen a huge explosion in kind of interest of kind of borrowing ETH from a centralized platform like Genesis, and then kind of deploying that into the DeFi protocol to kind of arbitrage away and take advantage of price discrepancies that kind of exist in both areas.